We're here at the Goldman Sachs 10,000 Small Business Summit in Washington, D.C., joined by David Solomon, Chairman and CEO of Goldman Sachs. And David, thank you so much for joining us.
Well, I'm really pleased to be with you, Monique. Thank you for spending time with me.
Of course, and it's such a big moment. Am I right? This is the largest gathering of small business owners in U.S. history at an event like this.
Yes, we're really thrilled to have over 2,500 small businesses here in Washington. These are all businesses that have gone through our 10,000 small business program over the last 15 years. I think at this point we have close to 13,000 businesses across the country, representing every state and Puerto Rico that have gone through the program. And it's an interesting time for small businesses. They've faced a really difficult challenge during the pandemic, and they're coming out of the pandemic and now dealing with inflation in our economy. But they're concerned, but they're optimistic, and they're excited. They believe in the resiliency of the American economy, and they're excited to make their mark. And so we're super excited to support them and give them an opportunity here in Washington to advocate with their legislators on things that could really support the growth of what they're trying to do.
And speaking of support, Goldman has donated $750 million towards helping small businesses. And I think people from the program have gone on collectively. It's $17 billion in revenues across alumni for the program. And I think now employs 250,000 people as well, right?
Yeah, and you've got the numbers right, but I just say I would use the word have invested, because I think about that $750 million as an investment in the American economy. So much of job growth over the last 25 years in the United States has come from small businesses. I think 60% of job additions in our economy have come from small businesses over the last 25 years. And so we view that $750 million that has funded this program as an investment in economic growth in the United States. And so we're really excited that it's having the impact that it has.
And part of the program is this bellwether of data, these surveys that you put out, and some of the latest information that came through really just spotlights some of the challenges that business owners are still feeling and facing right now. I think over 93% are worried about a recession, and you have some thoughts on that as well, right?
Absolutely. I think it's not surprising that such a high percentage of these business owners are concerned about a recession. We have inflation. We have monetary policy that's now tightening economic conditions in the economy to try to make a dent in that inflation. And historically, if you're a student of economic history, whenever we've had a tightening cycle, when there's been inflation, and a recession has followed. Now that doesn't mean that it's baked in the cake that we'll have a recession here, but the chance of a recession is certainly higher than it was a few years ago. And so naturally, people are concerned. That said, the survey also points out that 61% of those same small business owners are extremely optimistic about the opportunity they see with their business and their ability to grow their business going forward. So these are entrepreneurial business owners who really believe in what they're doing, they're passionate, and they're excited about their ability to grow their businesses and contribute to the U.S. economy. And so the U.S. economy is quite resilient. And my expectation, we'll get through this.
Right.
I can't predict whether there will or there won't be a recession, but I do know we'll get through this. Hopefully we'll make some good policy decisions along the way. And hopefully small businesses can play a meaningful role in helping us through the speed bump in the economy.
Right, and while we know that you can't predict, I think your feelings about the chance, the likelihood of a recession, has that shifted a little bit more towards?
Well, I think it's higher than it was a couple of years ago. But what I would say is, if you look at our economist, Jan Hatzius, our leading U.S. economist, who I think is just absolutely sensational, he thinks the chance of a recession in the next 12 months in the U.S. is 30%, and that it's 50% over the next 24 months. As I talk to business leaders who are running big corporate platforms, I think they think the chances of a recession is slightly higher than that.
Okay.
But again, it's not certain, and nobody knows. So it's a great parlor game to predict, but I think the more important thing is to stay focused on what you can control. I think it's a period of time, if you're running a business, whether big or small, to be disciplined, to be cautious. Maybe to take a look around and make sure you're allocating your resources in places where they're really being productive. Just time for a little bit more caution while we see whether or not we can navigate this with a softer landing.
And is that how you are advising clients right now? What are some of the the feedback that you're telling your clients.
You know, it's an uncertain period, so you have to be more cautious, you have to be more prudent, but at the same point, you know, if you've got a good business model and you have a long-term view as to where you're going, don't stop investing in the long-term success of your business.
And going back to the purpose of the summit, you've convened so many key lawmakers here today, and you're really putting forward a call to action about reauthorizing the SBA. Can you talk about that for a little bit?
Absolutely. One of the reasons why we've brought all of these, or it's principal reason why we brought all these small business owners here to Washington, is so we can help them have an advocacy voice on Capitol Hill. I think it's super important that our legislative leaders understand the challenges that small businesses face. And so by bringing them here today, today's really a vision day for them to hear from lots of leaders, learn, think about interesting things that can help their businesses. Tomorrow is an advocacy day where we're going to bring legislators to them so that they can talk to legislators directly about some of the challenges they have. And we really believe that reactivating the SBA for the first time in 20 years, the last time that the SBA was activated was when Tom Brady was a rookie. So so it's been a little while.
20 years, right?
Yeah, Tiger Woods won his first golf tournament. So it's been a little while.
It's a different world
today. It's a different world. So we were still printing out maps on MapQuest. Okay, so a very, very different world. But we think there's a great opportunity there. We need to make sure capital is available and liquidity flows to small businesses so they can borrow and then make investments. So many small business owners are skeptical of their ability to borrow when they need to invest in their businesses. And there are other ways that we can really support small businesses to make sure that they continue to be a vital part of economic growth in this country.
And what I think is so interesting is so many people talk about solutions. You guys have actually proposed actionable solutions. So there are 4 key areas, I think, besides the ones that you mentioned, that you outlined, where lawmakers can really come in and help.
Absolutely, and that's what we've tried to do with this program. As we've thought about this program over the last 15 years, and it's important, you know, for your readers to understand, this is something that we started investing in 15 years ago that we're really committed to. And if you want to do something with impact, you have to really invest in it and be committed to it. It's no different than building a business. And so the lens that we use is to think about how we can do things, make investments, and have impact that can substantively make a difference and help people move forward. And so we're excited about what can come out of this, and obviously when it's over, we'll go take a look at where we think we moved the ball and where we didn't. We'll amplify those messages and we'll think about how we can move forward.
And has the response from Washington thus far been receptive towards?
Very, very, very receptive, and that's why, for example, I think you know I was just on stage with Tim Scott and Kristen Sinema, the 2 senators from South Carolina and Arizona, who both said to me how fantastic they think this program is and how they encourage us to continue to invest in this program. And they made some very, very good points about opportunities for small businesses and places where they thought there was a real bipartisan effort to continue to strengthen small businesses. And I know also that both the senators walk into this event and also come out, and they have lots of constituents from their states who are small business owners who want to say hello and thank them for being here, but also gives them an insight into how this really touches all our communities across the country.
So shifting back to Wall Street and the deal-making landscape a bit, Goldman came out with earnings. We were following that closely yesterday. Investment banking revenue was down across Wall Street, but trading revenue was really strong and brought in $6.5 billion. Do you expect over the next 6 to 12 months that that's going to be leading the train on Wall Street, predominantly trading revenue?
I'm not a great forecaster, but I know that we set up our business to make sure we can serve our clients with a long-term view, and if our clients are active and there's opportunities to help them, we'll obviously benefit in our business. I think that the change in the economic environment, which happened very quickly, the war in Ukraine, the de-risking of risk assets, really hurt the investment banking business. Capital markets activity has been anemic during the first half of the year.
Last year was an anomaly.
Last year was an anomaly. We said it was an anomaly when it was occurring. But this is an anomaly too. This is not normal either, on the other end of the spectrum. History tells me that there have been very few periods where capital markets activity remains anemic for years. Because businesses have to move forward. They have to reset their mind around valuation levels, around the price of debt financing, et cetera, but very quickly, within a few quarters, they do, and then that activity picks up again. So I wouldn't be surprised to see capital markets activity picking up, whether later in the second half of the year or next year, as we move forward and people adjust to the new environment with respect to valuations, cost of debt, et cetera. At the same point, there's been a lot of volatility and people have been repositioning their portfolios, big changes, and so our clients have been very active in the markets business, and we've tried to be there and serve our clients. We've been really pleased with the market share gains that we've had in that business. I think we've been extremely client focused on making sure our clients are being serviced in a way that's really helping them.
And more emphasis on wealth management as well, right?
Absolutely, we're very focused on our wealth business. So I feel good about the strategy of the firm. I said on the earnings call, there's nothing about this environment that changes our strategy of continuing to invest in our core businesses, banking and markets, but also investing in those growth opportunities for the firm, our asset management business, our wealth management business, our digital consumer bank, our transaction banking business. We think we're building a more diverse, more durable platform. We're growing Goldman Sachs and we're finding different ways to serve all of our clients, our big government and corporate clients, our institutional clients, but also individuals that come to Goldman Sachs for their needs also around financial services. And so we feel good about the progress we're making.
So does the current market environment lend itself to any interesting opportunities perhaps in the crypto space? I know that you're restricted in many regards there, but it may be interesting pockets of opportunity that you're seeing that maybe could be taken advantage of, maybe not even not for Goldman, but for other types of investors?
Well, there certainly has been interest in cryptocurrencies. We've tried to talk to our clients about how we see those opportunities. You correctly point out, as a regulated financial institution, we can't operate as a principal in cryptocurrency markets. But I think the more interesting thing, much more interesting than Bitcoin, for example, or Ether, is the digitization of the infrastructure of financial markets and how that digitization is disrupting the way money moves, the friction that exists in our financial system. I think there's big disruption in payment systems, and that's pretty interesting. We're spending a lot of time thinking about that, thinking about stable coins, which really are another form of bank deposits, and how that fits into the overall scheme. So there's a lot of disruption of the financial services infrastructure around the world that removes friction, benefits consumers and end users, and we think that's certainly a very interesting area that we're very focused on and thinking about how Goldman Sachs can play a bigger role there.
And so on a final note, on your earnings call yesterday too, you did indicate you're increasing your risk profile in the current market environment. I think there was some clarification about hiring and the pace of hiring. So what is Goldman's view?
Dennis, I mean, we've grown the firm very significantly, as you've noticed, over the last few years, and we still had plans for significant hiring in the back half of this year and next year. We're significantly slowing down the pace of hiring, but we don't have a hiring freeze, and we're still going to wind up growing our head count very meaningfully this year, and my guess is it'll grow again next year, but at a slower pace.
And on a final note, if you could leave the entrepreneurs here and across the country with one piece of business advice in this environment, what would you want to share with them?
I think the trick in this environment is you always have to be thinking about the long term, taking the long view and investing in your business, but you've probably got to be a little cautious and a little bit more prudent and a little bit tighter in the way you do things in this environment, because there could be some volatility or some economic contraction that slows down your business, and you've got to anticipate that in this environment. Particularly if you're running a business that's sensitive to consumer behavior, I think you've got to be a little bit cautious here until we have more certainty around the trajectory of the economic environment. And so a little bit of caution, I think, can go a long way.
Well, David, thank you so much for
Absolutely.
your time.
Thank you. Thank you for having me.